Hello everybody, Robert Wilkes here, editor of the BW Money Report. This is a 2-hour chart of the SPY, the tracking stock for the S&P 500 index. And I drew a trend line from this high to this high, and also from this low to this low, and then these little white lines are the extensions. And if I zoom out on this a little bit, you see it's a triangle pattern. Some people call this a symmetrical triangle pattern. I'm not so much into chart patterns, but a lot of people are, so therefore they sometimes become a self-fulfilling prophecy, so I do look at those. This is kind of best seen on a 2-hour chart. If we back up to a 1-hour chart, you can also, and we zoom out, you can see it. This is a pattern that represents lower highs, as you see here, and higher lows, and so they come together at a point, and this pattern is has a high probability of demonstrating a breakout either in the move up or the move down. From the studies that I have read of this particular pattern, it's more of a continuation pattern. So since we look at a 5-day or a trend 5 pattern, and our colors are red, green, and yellow, green for long and yellow for caution and red for down, then we are still in a uptrend. Our daily has a yellow alert. It went from red to green to yellow. Our 2-day is still in the green or the long or the up trend, as well as our 3 and our 4. I'm not saying that it can't break out to the downside. There is a lot of concern about oil prices, and I'm going to talk about that in just a little bit, but this does represent a coming together, if you will, a meeting in the middle, and it will, of course, break either above or below this. The support level seems to be around 130 on the SPY. The high is near 135, so the range, if you will, is between 130 and 135. Now we did trade here below 130 but closed above it for the day. So the main thing is for the bulls is for the 130 level to hold, and if it does break out, to break above that 135 level, and then for that 135 level to become an area of support. We're looking at a monthly chart of the SPY. This is back in 2007, October 2007. The high for that month for the SPY was 156.70. Now let's look at crude oil. Crude oil during that same month, the high was 94.70. It closed out yesterday at 104.91, and you see it continued to rise up to here at its peak in July of 2008 was 146.65. Some of the experts are predicting $150 a barrel oil, which we got close to back in July of 2008. So if the SPY peaked during October 2007 and then continued on down to the lows of March of 2009, and crude oil was then at 94.70, we're already higher than that by almost $10. So are we going to go down from here? It's hard to tell. That's what it did back in 2007, and then as oil continued to rise, then the SPY continued to fall, and this was the peak of oil, crude oil, and then of course it continued to fall on down into March of 2009. Just something to think about. This is the focus now, is crude oil prices, and it's something to keep an eye on. And since we are in a symmetrical triangle pattern, as we talked about, back on the 2-hour, it seems to be indicating that the market is trying to decide which way it's going to break out. So it's anybody's guess as to what it's going to do. Just keep your eye on the crude oil, keep your eye on this symmetrical triangle pattern. The one thing that I have been focused on is this 20 period moving average here on the 2-day, and if we have been able to hold the 20 period moving average on the 2-day, and that is something that I am keeping my eye on. And as of yesterday's close, 130.87 is the 20 period moving average on the 2-day. You see we have broke below it and have closed back above it. So that's what I'm keeping my eye on right now, is the 20 period moving average on the 2-day, and of course that 130 price level. That's all I have for you for right now. Thanks so much for watching. God bless you.